all of you. It's a delight to see all of you bright and early this morning. We're going to have some exciting session now, and then for the balance couple of hours, it's going to get more exciting. It's an interesting topic. Money, money everywhere, not enough to buy. मैं सोच रहा हूँ यार, the stock market where it is, I need a lot of money at this moment in time to be able to buy and square off my positions in the stock market. So I'm not sure whether this topic was relevant a few weeks ago when the conference was conceived, and whether it is relevant even today or not. And that is what we're going to discuss, guys, over the next half an hour or so. Money, money everywhere, not enough to buy. Ashish, I'm going to come to you first. Is money, money everywhere. You've got a lot of money coming out from left pocket, right pocket, top pocket, having got listed recently. So my opening question to you is that what has this experience of listing been over the last few quarters?
So Anuj, the process itself it's like an Indian wedding. Okay. And I always tell that in India, people spend more money and efforts on the wedding than on the marriage that they're getting into. And I think often companies make the same mistake. They spend too much time and energy on the process of the IPO rather than actually running a listed entity subsequently. We've been an institutional player since the beginning. So for us, it was a transition from a private to a public platform. Nothing changed for us. Our monthly reporting became quarterly reporting. To that extent, actually, we are easier now than we used to be. But having said that, I often remind people that it's not the money that gets you to build businesses.
Very good.
Money is just one of the many ingredients which is required to build a company. When I started SAMHI, we had no money. And that is what eventually created what SAMHI is today. Money kept coming in. So I always remind people you can have all the money, like the topic is. It's not the money that gets you to build a company or buy assets if you're in the asset business. It's a much bigger strategy, the plan, the nuances you have. So it will never be about money.
And I like that is that, a lot of times we think is that it is just going to be about money, money, money. But it is true is that if you were to look at several experiences that the companies have gone through it, money is important, but I'm not sure it has been the topmost priority for, at least many of the entrepreneurs who've been able to convert into very credible businesses like Ashish has been able to do it is they will say is that money is important, yet not the only thing. Just a follow-up question, Ashish, on that is that what would you recommend someone who's looking to access institutional capital?
See, first of all, it's good time because a lot of large institutional players in the private space are feeling a deprivation of opportunities for them to deploy capital, largely because the IPO markets have been very, very remunerative and healthy. So many hotel companies have gone public over the last 2 years. So today, for any institutional capital provider to put meaningful capital, there's very few opportunities. Now, that takes to your second step of what makes you attractive for an institutional player. I think the first point is scalability. Institutional capital is looking for scale. And I often remind people of a famous formula that Sam Zell had, which is value comes from liquidity, and liquidity comes from scale. Right?
Nice. Value comes from liquidity, and liquidity comes from scale.
Right? So which means if you're saying I'm so valuable, you should be able to trade. There should be liquidity, whether it's an asset or a stock, right? And how do you get liquidity when you build scale? So the process of building value is through scale, and in between comes liquidity. So if you're trying to attract institutional capital, you have to have a plan, strategy, team, competence, character, to be able to build scale. And I think my lesson is that character is the most important.
Character is the most important.
Excel sheet underwriting, half the people in this room, 90% of the people outside have become humbled by underwriting. But they all look for flawless character in partners and platforms they want to invest in.
Beautiful, and I can endorse that 100%. What a beautiful statement that Ashish has said is that sometimes we forget that. That it is, on the other side, that institutional capital is also a human being. And in a country like India, which has got, like a yo-yo effect. There will be, issues that will come in. There will be near-death experiences that would come in. And at that time, the character of the person really comes out. If the character is good, exactly what you're saying is that ability to attract institutional capital is very much there. Sanjay, coming to you, you're like the blue-eyed boy, Chalet Hotel. It's got scale. It definitely has character. It definitely has the DNA. What you and the team have been able to build is, unenviable by many, many brands, the way that you've been able to do it cautiously. You have, in a way, proven this topic a little bit wrong. Or no, right, maybe. Money, money everywhere, and not enough to buy. But you've been able to demonstrate acquisitions. So I want to understand is that on one side we are saying is that we're just not being able to get enough acquisitions. Yet on the other hand, I believe you've got two operating assets that you've acquired, and at least one or two which are in the brownfield, greenfield that are coming up. So, clearly how you've been able to get more the operating assets.
So, Anuj, thank you for your kind words. Before I get into my answer, just a quick clarification. I got asked this 2 or 3 times in the last 1 month, including in the 2 evenings gone by, that there's rumors that I was moving out of Chalet. Let me deny it, not only deny it, let me say it loud and clear. There's no intention of me moving out of Chalet Hotels and moving to another company. I'm happy where I am. So that out of the way. Coming to your question.
Thank you. I think that was with a little bit of alcohol in the body.
Not in my body.
Not your body, I think, at the floor. So it is good is that with now black coffee in the body, they will realize that this is where the truth is.
No, I just wanted to send the message out loud and clear and hear it from the horse's mouth. Coming back to your question, listen, Chalet's been blessed with history which is created a foundation for where we are today, and I think it's been done so brilliantly well. The markets, as Ashish mentioned and you mentioned, will yo-yo depending on the cycles that we go through. It is the ability to be able to survive each type of market and take advantage of each type of market. And I think that's what we've done commendably. The teams have worked really hard at identifying opportunities that met our investment criteria and could be slightly different than some of the other people who look at hotels. And thereby, I think we've had some success with some of those opportunities. Our idea is to buy assets at maybe 10, 11, 1 year forward, multiple, and that's what we've done with all the 4 acquisitions that we've done. And then turn them around on their head in terms of operating efficiencies. And I think that's what's worked brilliantly for us. We also do a lot of greenfield, so that creates an opportunity for us to work on multiple fronts, which is acquire ready hotels or half-built hotels, and very importantly, buy land that we can develop, because that's the group DNA in terms of construction ability. We hesitated to getting into northern India for too long, and over the last 12 months, we've acquired now 2 ready assets in North India. We are developing an airport asset at Delhi. So clearly, we're setting our footprint over there in the northern part of India also. Like Ashish mentioned, it's not just about the money, right? I mean, I think one has to map 3 elements. Number one, of course, the balance sheet. Very importantly, the opportunities that are available. And third is the bandwidth. So if you can map all 3, which is balance sheet, opportunities, and bandwidth, and if required, adjust those to stay on a high growth path, you probably have success ahead of you.
I agree with you, is that if that you can match the 2 together, that is a good success on that. Anoop, we were talking about distress. That is when, some of these opportunities that come up. There is no distress, or is there distress in this segment?
That's a very difficult question to answer. There is a distress also in some of the hospitality projects, which either got struck up due to COVID, or they had their own legacy issues, and I think this is the best time for them to exit, or for institutions to make them exit. So these opportunities are coming in the market, and the only good thing is right now there are so many takers for those opportunities, and these assets are easily getting taken over by good companies. So that is how expansion is happening the inorganic way. Rather than developing a hotel through greenfield, where you take 3 years to develop a hotel, is you are getting good assets which you can convert and make to your brand standards.
And Anoop, when does an individual get into a distressed situation who owns a hotel?
Yeah. So RBI has defined it pretty well. If you don't pay for 90 days, you are in distress for us. So we start recovery action, or we'll start looking for partners who can come in and take over those stress assets.
And
Anuj, sorry, but I think the fundamental reason has been that people have looked at hotels as assets. Okay. It's only partly true. And the reason is my definition of asset is something which can be traded and traded relatively easily. Okay. The market for secondary opportunities of hotel assets in India is very shallow. It's not just for the buyers, it's also for the sellers, And for anything where the secondary market is that shallow, I would be hesitant to call it, quote unquote, an asset. It remains to be a business, and the business has a P&L and a cash flow. A lot of so-called distress that you see in the sector, which is independent of cycle, by the way, right, is because those investors looked at it as only an asset.
like an office leased
and
asset.
not as a
business.
income stream as a business.
I think that's a very important point.
And we call it dislocation. So we used to have 32 hotels. We sold one last week or 2 weeks back, so we have 31. Of those 31, if I'm not wrong, we built 4 and we bought 27. And we've bought hotels through all cycles. When we had money, when we had no money. We've bought assets at our worst time coming out of COVID, where our balance sheet was hugely stretched. So I think the opportunities are there, but they're more dislocated to what the difference between cost and value, right? Warren Buffett famously said, cost is what you pay, value is what you get, right? So I think that philosophy works in all cycles at all times. But the reason for what Anoop is talking about, in my opinion, to some limited extent, is this whole classification of hotels as quote unquote assets.
And I agree with you, is that, it is a live animal that needs to be fed every
Daily.
day. It needs to be cared. It needs to be groomed. To think that it is an asset like an office lease is very different, because it doesn't matter. I mean, you're going to lease for 9 years. You're going to make sure that every month the rent just comes in. Whilst in this one, it is different.
The other reason is also because these are all long gestation projects, right? The return is not so fast, so early. And some of the developers who basically have graduated from real estate sector, they were looking very fast to get returns, which were not there. So they also want to exit, which is a natural sale which happens, asset sale which are happening. But those who are in this business, as a business, they continue with the assets.
Yeah. And just on that point, I do want to bring in your thoughts, Sanjay. Is yesterday we had this owners panel, and we had Jitu and we had Atul Charodia come in. And the impression that I got was that they are in this business because the hotels are supporting their real estate developments, whether it was the commercial IT parks, whether it was the offices, because they were being able to get a premium. Their thought was that standalone, it actually doesn't make any sense for us to do the hotels. And, from Atul's perspective, he said is that the only way that this can make money, for owner, is if the operators increase the room rates. Because the room rates are very, very low compared to the cost that is being asked by the brand to spend on it. I would really like your thoughts on this.
So Anuj, I didn't watch that session, but listen, if you're going to start on the premise that hotels are only support services, then you'll never make money. So the premise has to be, this is a business that you want to be in, and you want to make returns out of that investment. So I think I disagree with that part. Second, I agree with them that the average room rate will drive profitability further. I think India is reaching a point where we are in a comfortable place on the rates front in most cities. There is headroom, significant headroom for growth. So we are in a happy position for the next 4 or 5 years, which is the foreseeable future. But listen, we've got hotel companies just sitting on this stage right now who have demonstrated that you can make money on the hotels.
Yeah, I'm still in disbelief. We have a whole company which has not got any square footage of office or retail or residential attached to it. And we make money. And our best performing hotel actually is a 14 square meter room, Holiday Inn Express in high-tech city, Hyderabad. So I think, Atul, it's, the fact is that it is a different business, but I agree with Sanjay. It's not a chandelier that you hang next to your office building, right? It's a business by itself.
Maybe it's a comparison, the money that they're making in the other asset classes versus this, maybe different. I do want to, Ashish, come to you, moving on from that point is, you have several brands that you've been able to manage beautifully, very effectively is. How do you really, when you acquire and you have to put in a brand, how do you go about that?
Oh, so listen, there's not a lot of science behind it. I hate to say this. Hotel brands behave like commodities, but in bands. So when I say that, which means when you take mid-market, there are 5 brands, plus minus a little percentage points, they're all commodities, and then you move to the next segment, and then you move to the next segment. As Conrad Hilton famously said, it's all about location, location, and location. If you are in Outer Ring Road, Bangalore, you can pitch a tent and make money. If you're in city A, B, C, I will not name them, you can put a Four Seasons or a Ritz-Carlton, you will not make money. It's a business of curbside, very similar to QSR. If you're on the right side of the road, you will make money. If you're on the wrong side of the road, you will not make money. Now, brands is a bridge to get to the customer, right? It's as simple as that. I need to build a bridge to get to the customer. Therefore, distribution and loyalty are becoming really, really, really important. So when we choose our partners, clearly we are biased towards partners who have very strong distribution capabilities, online, offline, and who have strong loyalty programs. But other than that, we have well-set relationships. We have very successful mid-market business with IHG, the Holiday Inn Express hotels, very proud of that. We have a huge relationship with Marriott, which we've been growing, and then we have hotels with Hyatt. We obviously keep looking at other opportunities, but in the end, I will be honest, it's all about, Anuj, location. And once you've got the right location, then you can dissect it in different segments and operators and all of that,
Anoop, coming to you on this particular thing is that how important is the brand for you when you're doing your credit assessment?
This is important because we know what type of hotel is coming. Somebody moving to us and says he wants to do this hotel with this brand, it makes sense because we know this hotel will have these type of standards. And the reach of the chain with that brand, what is the reach of the chain and how successful they are in the country. Secondly, we also appreciate what will be the capital cost involved and how much debt can be sustained by that brand in that market. So I think since our inception, we have been doing only branded hotels. So some of the Indian brands have grown with us over the years. So we would always go with branded hotels only.
Sanjay, you've got several brands. Each brand has a different working style or not. I don't know. I'm just asking that is, how difficult or easy has it been having these sort of multiple girlfriends across the board?
How difficult he has been?
I don't like the analogy, but yeah, okay. Look, Chalet's always had multi-brand portfolios. Earlier it was Starwood and Marriott, the two fiercest competitors globally. And then we've now got an Accor hotel, and we've got, of course, Marriott bought out Starwood, so our eggs came in one basket. But we signed the Taj, we're doing a Hyatt Regency. So yes, we remain multi-brand. Look, how we've seen it is that we pick up the best practices across the portfolio and implement in the rest. So to that extent, it's worked brilliantly for us. Even when Starwood and Marriott were operating our hotels, and we used to actually capture the best practices of one and ensure that it's replicated in the second one. And I think that's what lifted the overall portfolio for us upwards, and therefore the margins that we are able to deliver.
And as I said, these are a lot of the, you're dating a lot of them and you're committed getting in there is, but you are also now getting married to a brand of your own.
Well, that's still on the this thing conversation stage. When that happens, we'll announce it.
Right.
For now, let me just clarify. I don't think we are looking at a brand on the asset light side. I think the idea is we run 2-3 hotels of our own ourselves. It might just make sense to string them with a common name, and that probably will be the only purpose for now.
Got it.
Does it create a springboard sometime in the future to create an asset light business? Sure, it does. But for now, the intent is to string them together.
Ashish, one of the moot questions that, over the last 1.5 days that I've discovered is that, the sector is still very small. I mean, those who have attending this conference would have discovered compared to the global, and, we say we're India is big and India is doing exceptionally well. There's nothing wrong in that is. But then Akash Datta, he gave a presentation yesterday where he said is that the total number of rooms that we have is less than, say, 200,000 of category. And there is one hotel chain in China who has, over 250,000, rooms. So my question to you is that how do we scale up this sector?
Anuj, first of all this data is flawed, right? If you look at Bangalore market, hotel consultants will count anywhere between 15 and 20,000 rooms. You go and Make My Trip, there are 100,000 rooms listed. So you have your answer, right? Number one. Number two, China and India are very different. In China, a lot of businesses were supported by state institutions. And therefore, for the longest of time, the concept of cost of capital was non-existent. India, try building a business. Capital is extremely, extremely, extremely expensive. I must tell you, for the longest of time, even lenders didn't understand what this sector really needs. Because it was seen as an asset business, it was just very poorly structured. So today, if you want to scale up the institutional hotel business, because the 75,000 rooms in Bangalore and Make My Trip may not be non-institutional, right? A lot of them will be less than 10 rooms per establishment.
True.
If you want to scale up the institutional hotel business, I don't think we have the skill set in this whole room to be able to do that. And I can also include Hixa crowd in that, by the way. The approach has to be very different when you leave the comfort of tier 1. And tier 1 not just for business, also for leisure locations, right? You're in Goa and Jaipur. The approach to making a financially successful hotel in tier 2, tier 3 in a scalable manner, it's just a non-existent skill set in this room right now, including operators, owners, and consultants.
But when you say skill set means what?
We've got to completely dismantle the way the hotels are looked at in terms of product, in terms of service standards. And it's not just for us, Anuj. Even for a Starbucks, you'll make a lot of money in the top 80 locations, and the moment you go from 80 to 400, the reality comes to 4, right? So I think you have to completely deconstruct the hotel business in India for it to be financially sustainable in terms of scalability. It's extremely good in tier 1, leisure and business. But the moment you go to tier 2, tier 3, it becomes very volatile. It's very anecdotal. It can be very successful for 2 years, and then it may not be. You may pay 18,000 rupees for a hotel room in Coimbatore. By the time you invest, you realize your room is selling for 2,000 rupees. So it's very anecdotal. It's not based on a lot of modeling. I think we need to really, really look at simpler products, low capex, simple operations, so therefore low OPEX. We can sustain low rates, still make profits. It's a very different business to what generally people in this room understand.
Sanjay, your thought on how do we scale up this sector?
I agree with Ashish. I think the other concern that I've had, at least with tier 3 and tier 4 markets especially, is the depth of the market. Now, you go and open a 100-room hotel in any of these cities, you're probably increasing 30% supply there. It might sustain one hotel. The moment you get to a second one, the occupancies will crash and the rates will follow. So that's my sort of assessment of the tier 3 and tier 4 markets. So what I see happening, local entrepreneurs having existing land parcels will probably build those hotels because the land cost is assumed as zero, and therefore they may stay viable. But to buy land and then build it in some of these markets is fraught with risk. Coming back to what Ashish mentioned about the tier 1 cities, tier 1 cities are also getting very difficult now. I mean, if you look at today Mumbai, where 55% of our portfolio is today, to buy a land at today's market prices and build a hotel, whichever positioning, is unviable. The only way you can develop a hotel in Mumbai today is either you have legacy land or you do a large mixed-use development, and there you sort of play around because it's subsidizing one to the other because the cash flow cycles of mixed-use are different. And therefore, you can match that to make it a viable proposition.
But then, Sanjay, how are we going to ever scale this up? Because we're saying is, look, tier 3, tier 4 is a little bit of a suspect. Tier 1, we're saying is because the land is so expensive that the other asset classes, the investor, stakeholder, developer would lean towards the other asset classes. So, my worry is that is this going to sector becoming, marginalized in that?
So the only impediment to growth of our industry, it's not the demand, it is the supply, right?
Yes,
And the
I agree.
supply challenge, I foresee that continuing for the foreseeable future. And when I say foreseeable future, I'm talking about the next 4 to 5 years at least. I believe it'll go longer than that. We don't have data to support it now.
It will find its way, Anuj, right? I'm not saying it will not grow, but all I'm saying is the skill sets need to be very, very, very different. When we launched the Holiday Inn Express in India, we had to deconstruct the whole business. 14 square meter room, never heard of. Room to staff ratio of 0.3, 0.33, right? Even we were suspicious if it is going to work, but we had to make that bet because we felt that gives us the recipe for scalability. Today, we're very proud and happy. It has worked. A 14 square meter room works and works beautifully. 0.3 staff to room ratio works beautifully. We did not invest in a staff cafeteria. The staff eats in the same cafe where the guest eats. It works beautifully.
Look at it. Who would have ever thought that?
So I actually think that you need a very different approach for scalability.
Very good point.
You have the opportunity, you don't have the approach to scalability.
My thought, sorry, Anoop, slightly different question is, where do you derive more comfort from, by sort of giving credit on luxury, business, resort, mid-tier? Which category do you drive the best comfort?
Yeah, before I answer that, I would like to add on to what they have said. I think they said scalability is not there, which they say from the brand point of whatever you want. But what we see in every city, in every smaller places, there are many local entrepreneurs who are coming up with hotels, and now they understand what type of hotel they have to build. Initially, they were not aware, but now they understand, even if they are doing a hotel in budget segment, they know what the market demands in that location. So it may be a very small hotel, but if they feel there's a banquet market, they will add a banquet there. They also understand what type of restaurant they require, so they are not adding 2-3 restaurants, which earlier used to be there for their hotels to fail. So they have understood the sector. And thanks to all the chains, we have made them to understand this segment, and the growth is there and it will be evident. So I totally disagree. It can't be enhanced over a period of time. I think there will be a lot of inventory which will come up in this country, and it has to happen. Because even today, we have more than 1 lakh or 2 lakh of unorganized hotel rooms available, which can be converted. And there are very small chains which are doing that so well now. And secondly, there are a lot of third-party management companies which have come into picture, and they are managing these small properties. That is also there. And now the question which you have asked me, we are funding all type of hotels. So whether it is luxury, whether it is budget, whether it is co-living spaces, whether it is service apartments, depends on the location, depends on the project. As long as it is economically viable, we are there to fund it. And that is our motto for the last 35 years.
But no preference.
No preference. I think we, as an institution, we were saved because we had done 30% leisure, we had done 30% business, we had done 30% MICE hotels, and during COVID time, our leisure segment boomed. So that was the cash recovery which happened. So we are open to all hotels. As long it is a hotel, it is serving people, we are open to fund it.
My final question, we've got last 1.5 minutes left, is, Ashish, I'm going to start with you, is, over the last 1.5 days, I've met a lot of people in this room, who have one hotel or who have come in here to understand that this is the business that we want to get into it. They have land parcels, which are beautifully located. From a location perspective, it's a big tick on the hotel. One piece of advice that each one of you can give, the people on the floor, as they either venture into this, sector, or may have just ventured with one hotel and are wanting to now look to scale this up. One piece of advice.
So typically people say that all businessmen should be very passionate, but that's a word of caution for people who want to be in hotel business. That passion and profits always conflict. Not always, often conflict, right? So I think people who want to be in this business, they got to keep their passions in control if they want to be profitable. Or otherwise, let's be honest, they're just doing it for passion, and which is fine. This is one business where passion and profit combination is not always very favorable.
I think Ashish touched on a very relevant point. I would add to that actually to something else. I think anyone getting into this business for the first time should be fully aware of the cash flow cycles. Very often people step into this without understanding the cash flow cycles and run into problems. I think that's one point of advice.
I think both are beautiful point of advice. And my thinking is that is where I have seen many people get caught out. Only on those 2 points. And cash flow cycles, not only from the perspective of that you've invested and then 5, 6, 7 years later, but 5, 6, 7 years later, renovation also then starts to come in. And then there is another.
Another pitfall is people think it takes X lakhs per room to build a hotel. Nothing could be more wrong than that. It is always X rupees per square foot. It is never X lakhs per room. It's the most flawed way to say what it takes to build a hotel. And they all make a mistake because where they should have spent 600 square feet per room, they end up spending 1,200 square feet per room, hoping, but the hotel is built for 80 lakhs per key. But that's not true. It is always per square foot.
Final piece of advice, Anoop, from you.
So my advice to anybody who wants to enter in this sector is that they should have the best planning before they start actually implementing the hotel. People start implementing the hotel before planning, and then everything happens and the project gets all struck up in between.
Good point.
Which is what is happening.
And don't borrow to build. Borrow when you have built.
Depends. Capital is always required. Today, equity is booming, but the way market is coming down, I think you will again have to go to debt only.
IDCs are very expensive.
So guys, the three things a lot of people did ask me this thing from the floor is, so I would say is those who are wanting to scale up their hospitality business or those who are wanting to venture in it, differentiate between passion and profit. That's what Ashish says. Sanjay very rightfully put together is cash flows are very, very important. And Anoop, from your perspective, plan before you start to implement. Yes. Don't jump into it and then discover is that you're not going to be able to complete it. Guys and girls, a big round of applause to our panelists here. Thank you very much, Ashish, Sanjay, and Anoop. Thank you.